Hello and welcome back to iCalculator. Today, we're adopting a different format to address some of the most commonly asked tax questions in Singapore. Our goal is to provide clear answers and shed light on various aspects of the tax system. Now we're tackling some of the most commonly asked tax questions in Singapore. Our goal is clear: to provide you with straightforward answers and insights into various aspects of the tax system. If you've got any specific questions of your own, don't hesitate to post them in the comments below. We've gathered a range of queries that many of you have asked, and we'll be addressing these, starting right from the foundational structure of Singapore's tax system to the finer details of tax filing procedures. Let's dive into these common questions and demystify the world of taxation. What is the deadline for filing personal income taxes in Singapore? The deadline for filing personal income taxes in Singapore is typically April 15th each year. Taxpayers should gather all relevant income statements and documents in advance. E-filing through IRAS's MyTax portal is the most convenient method, but paper filing options are also available. How does the progressive income tax system work in Singapore? Singapore's progressive income tax system taxes higher income earners at higher rates. Income is divided into bands, with each band subject to a different tax rate. Taxpayers should understand which band their income falls into to estimate their tax liability accurately. Can I claim tax credits for foreign taxes paid if I work overseas? Residents of Singapore who pay taxes overseas can claim foreign tax credits to avoid double taxation. To do this, one must provide proof of foreign income and taxes paid. These credits are then deducted from the Singapore tax payable. What are the tax implications for owning and renting out property in Singapore? Property owners in Singapore must declare rental income as part of their taxable income. Allowable expenses such as maintenance, property tax, and mortgage interest can be deducted. Property owners should maintain records of all such expenses for accurate tax filing. How are capital gains and dividends taxed in Singapore? Capital gains are not taxed in Singapore. However, dividends from Singaporean companies are generally tax-exempt due to the one-tier corporate tax system. Dividends received from foreign companies may be subject to tax depending on various factors. Are there any special tax considerations for self-employed individuals or freelancers in Singapore? Self-employed individuals and freelancers must declare their income and are eligible for certain business-related deductions. They are required to maintain accurate financial records and receipts. Contributions to the MediSave account are mandatory and based on their net trade income. What tax benefits are available for families or individuals with dependents in Singapore? Taxpayers with dependents can claim various reliefs, such as child relief or parent relief, to reduce their taxable income. These benefits are designed to alleviate the financial burden on families, and taxpayers should understand their eligibility and claim accordingly. How does the tax system in Singapore support retirement planning? The Singapore tax system supports retirement planning through the Supplementary Retirement Scheme, SRS. Contributions to SRS are tax-deductible, up to certain limits, and can be used to reduce taxable income. This scheme is voluntary and complements the Central Provident Fund, CPF system. What are the specific tax rules for expatriates on employment passes in Singapore? Expatriates in Singapore are taxed based on their tax residency status, which is determined by the number of days spent in Singapore. They are generally taxed only on income earned in Singapore. It's important for expatriates to understand their residency status and the applicable tax rates. How does the Inland Revenue Authority of Singapore, IRAS, handle tax disputes or queries? IRAS handles tax disputes and queries through its customer service channels. Taxpayers can raise disputes or clarify doubts via phone, email, or in-person visits. For disputes, there's a formal process to lodge an objection, which must be done within a specified time frame after receiving the notice of assessment. What is the tax residency rule in Singapore? Tax residency in Singapore is determined based on the physical presence or stay in the country. Generally, a person who stays or works in Singapore for at least 183 days in a year is considered a tax resident. Tax residents and non-residents are taxed differently. How do progressive tax rates affect individual taxpayers? Progressive tax rates in Singapore mean that higher portions of an individual's income are taxed at higher rates. Taxpayers should calculate their taxable income after accounting for deductions and reliefs to determine their applicable tax rate for each income band. What are the available tax reliefs and deductions in Singapore? Singapore offers various tax reliefs and deductions for individuals, including those for dependent family members, education expenses, and contributions to retirement funds. Taxpayers should review their eligibility for these reliefs each year to ensure they claim all applicable deductions. How is GST applied in Singapore? Goods and Services Tax, GST in Singapore, is a consumption tax applied to most goods and services. Businesses registered for GST must charge and collect GST from their customers, and then remit this amount to IRAS. Consumers should be aware of the GST rate included in the price of goods and services. How is property tax calculated for different types of properties in Singapore? Property tax in Singapore is calculated based on the annual value of the property, which is its estimated rental income. Different rates apply for owner-occupied and rented properties. For owner-occupied properties, the tax rates are progressive, meaning the rate increases as the annual value goes up, but these rates are typically lower than those for non-owner-occupied properties. Rented or investment properties are taxed at a higher rate, reflecting their income-generating potential. The annual value is determined by IRAS and is based on the potential rental income of the property, not on the actual rent collected. To calculate the property tax, you multiply the annual value with the applicable property tax rate. Property owners can find the specific tax rates and calculate their property tax using tools and resources provided on the IRAS website. For more in-depth exploration of Singapore's tax system and answers to additional tax-related questions, visit our iCalculator website. We regularly update our content to provide you with the latest and most relevant tax information. Check out the link in the description for comprehensive guides and tools. We hope this session has enhanced your understanding of Singapore's tax system and addressed some of your key questions. If you still have any queries or need further clarity, please don't hesitate to reach out in the comments below. Your questions help us and others gain a broader perspective on these important topics. Stay tuned for our next video, where we'll explore tax filing and payment in Singapore. We hope you found this video helpful. If you did, be sure to subscribe to our channel, like this video, and switch on notifications to ensure you never miss an update.